Today, we're going to talk about Shopify, but not their success stories or their cool marketing. No, we're going to dig into something way more interesting, the official risks they are legally required to report to their investors. We're decoding the fine print.
So have you ever wondered about that? I mean, when a company's that successful, what are the real threats they're worried about? We're not talking about next quarter sales numbers. We're talking about the fundamental, game-changing challenges that could shake everything up. And believe it or not, they write it all down. It's all hidden in plain sight right inside their annual 40F report. This is a legal document where companies have to come clean about everything that could possibly go wrong. It's basically their diary of corporate fears, and we're going to read it together. All right, first up, let's get into what I call the paradox of growth. See, Shopify's incredible success has been amazing for everyone involved, but getting that big has also painted a giant target on their back, creating a whole new set of problems.
Just look at this battlefield. Shopify isn't fighting a single enemy. It's fighting an entire army on multiple fronts, all at once. You've got other e-commerce platforms, payment giants, point-of-sale systems you see in stores, massive marketplaces, fulfillment companies, the whole shebang. Because Shopify wants to be the one-stop shop for everything, it means they have to compete with everyone.
And hey, don't just take my word for it. This is a direct quote from their own report. They are literally telling investors we expect competition to increase. They're not hiding from it. They're basically saying, look, it's already a battle out here and it's only going to get more intense. They see it coming.
On top of those direct competitors, Shopify also lives at the mercy of the internet's landlords. You know, the huge tech platforms like Apple and Google that control the whole ecosystem. When they decide to change the rules, everyone else just has to deal with it.
Here's a perfect example that they point out themselves. Remember when Apple rolled out those big privacy updates for iPhones? Well, that wasn't aimed at Shopify, but it created this massive ripple effect. All of a sudden, it became way harder and more expensive for Shopify's merchants to advertise to people. A decision made in Cupertino created a huge business risk in Ottawa. And the scary part? Shopify had absolutely zero control.
All right, so let's move on to Section 2. Beyond the direct competition, there's this whole other web of external pressures closing in on Shopify. Forces that are way bigger than any one company, like global regulations and the health of the entire economy. Think of it like a chain reaction. It all starts with one new law somewhere in the world, say a new privacy rule in Europe. That's just step one. Now Shopify has to spend a ton of money adapting its platform. Then they have to help hundreds of thousands of merchants get compliant. Every single new rule adds another layer of cost and complexity. It's a never-ending cycle.
And we're not talking about just one or two laws here. The report makes it clear they're dealing with a constantly shifting landscape. We're talking data privacy, consumer protection, different tax codes, anti-money laundering rules, all changing all the time in dozens of countries. It's a legal minefield.
And then there's the big one, the economy. This is actually pretty simple. When people like you and me stop spending as much, maybe because of inflation, Shopify's merchants make fewer sales. And if the merchants aren't making money, Shopify isn't making money because a huge chunk of their income is tied to those sales. Their fate is directly linked to the health of our wallet. Now for our final section, we're going inside the black box. Because you see, some of Shopify's most unique risks aren't from the outside world at all. They're actually built right into the company's own leadership and corporate structure.
At the very heart of this is something really unique called the founder share. This is not a normal stock you can buy. It's a special share created just for the CEO, Tobias Lütke, and its whole job is to give him a variable number of votes to make sure his total voting power never drops below a certain point. It's basically a permanent control mechanism.
So, how much power are we talking about? As of early 2024, that number is over 40%. 40%! That is an immense concentration of voting power in one person's hands. It gives him a massive say in every single major decision the company makes.
And again, to their credit, the company is brutally honest about the potential downside. They state right there in the filing that this structure could cause conflicts of interest between the CEO and everybody else who owns stock. They're openly admitting that what's best for the founder might not always be what's best for the other shareholders. This leads us to another classic business school term, key person risk. It's this idea that a company is dangerously reliant on just a few people. And Shopify says it flat out. Their future performance is deeply dependent on their CEO and his top team. Their vision is basically the company's vision. So what you have here is a classic double-edged sword. On one hand, having a founder with this much control is a strength. It lets them chase a consistent, long-term vision without worrying about short-term Wall Street pressure. But the flip side is that massive key person risk and the very real potential for conflicts of interest. It's a huge trade-off.
So after going through all that fine print, it all comes down to this one big question. We all know Shopify for its incredible culture of innovation, for its mission to arm the rebels. But is that spirit, that creative energy, enough to overcome these deep-seated risks we just talked about? Can it power through the fierce competition, the tangled web of global laws, and even the risks built into its own structure? That right there, that's the multi-billion-dollar question that Shopify itself is asking.